What's up everybody? Welcome to the Stocks channel. My name is Cory, and Friday in the stock market we see a continuation of that strong rejection from resistance. So the question is now, is the market ready to go for that next leg lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, just a heads up, today is going to be a very educational video and it may go longer than usual, but I do think it's going to be well worth your time. So the first thing we need to go over is the fact that we are still in a downtrend, so we are still expecting lower highs and lower lows, and I did warn you with that very strongly negatively sloping 20 simple moving average to look for a rejection from that area, because while we are in the downtrend, we are expecting to see lower highs and lower lows, and that is going to be a great risk reward ratio for bears to short at, and that is exactly what we are now seeing. So this now begs the question, are we getting ready for that next leg lower? So to do a real quick Elliott wave analysis, there is a very clear structure developing in the S&P 500, and that is a 5-wave move to the downside, which means we are now trying to finish wave 3. We should get some type of bull trap for wave 4, and then we could finally see that capitulation in that wave 5, where we are very likely going to try to put in a very significant bottom in the stock market before the end of the year. Now, the reason I think this is the wave count is because we have a very clear wave 1 down, we had a bounce for wave 2, and now we have a wave 3 that seems to be subdividing into 5 waves of its own. And this is very typical for a wave 3 to subdivide into 5 waves of its own, because wave 3 is usually the most powerful and usually does extend into 5 waves in itself. So if this wave count is correct, we should be preparing for that next leg lower right now, which is going to take us down to SPY 350. And then eventually, once we hit the target for that wave 3 low, it could be anywhere into 340s or possibly even into the 330s if that wave 5 goes lower. But we will be looking for a very strong counter trend rally for a wave 4 after that wave 3 completes. And then we will very likely get the full-blown capitulation, because we will have enough people on the long side to now fully capitulate and put a final bottom in this market, which could be all the way down there around SPY 330 or lower. So the reason I want to talk about the Elliott wave count is because I want to teach you how important it is to go with the trend, and that is why I use the saying that this is a downtrend until it's not. Every time we get a bounce in this market, you should be assuming it's going to be some type of lower high before the next lower low, until we break out of the downtrend. You should be expecting lower highs and lower lows until price action confirms that we have broken the downtrend. Burn that into your brain and do not forget it, because the trend is your friend, and constantly trying to go against the trend is very dangerous no matter which direction the trend is in. So now this is going to be the assumed market structure moving forward, and this will take us all the way out to midterms, and we all typically know that midterms are a very volatile period. So throw all of that seasonality crap out the window and follow price action, because it does look like we could be due for some turbulence. And as you can tell, there is going to be counter trend rallies along the way, and those are not times to be getting overly bullish. Those are times to start scaling out or adding to your short positions until we break out of this downtrend. So there is one other way we could count this, and it could be possible that we are getting a 3-legged move to the upside before we go any lower. And in that scenario, everything would just push out a little bit closer to the midterm elections, but we would still be looking for a very similar market structure. Everything would just push to the right. So if we get a 3-legged move for the upside before we go down to about SPY 350, then we'll be looking for a sharp rejection around the resistance trendline, which is going to be up here around SPY 390. Now, for this to happen, this 3-legged move cannot break the low that we had from September 30th, and that is also right around the 200 simple weekly moving average of SPY 358. So I always tell you, know both scenarios and be prepared for any of them. So you are looking for the next leg lower once SPY starts breaking down below 358, or you are assuming that we're going for that next leg lower while SPY is below 378. So I'm going to go ahead and delete the Elliott wave count off the chart, and I just want you to look at the market structure and see very clearly that we are making lower highs and lower lows, and we are currently in a trading range of SPY 358 up to 378. Do not overcomplicate it, just follow whatever the price action does first, and it's going to be a bullish breakout above 378 for a retest of 390, or a bearish breakdown below 358 for that price target at 350, and we do have price targets that could take us as low as into the 340s. So trading range right now until we get a breakout, and I'm not making any assumptions on which direction we're breaking out, but it very clearly looks like a high volume, strong rejection from a negatively sloping 20 simple moving average, which does strongly favor the bears to make that next leg lower. It's just going to depend how many buyers are at SPY 358, because if there's just way too many buyers at this level, then we will not likely make that next leg lower, and that is just something you're going to have to follow with the price action. We cannot know for sure if buyers are going to step in until we see it in the price action. So in the event we do start bouncing on Monday, we could still go up there to SPY 390, but again, it is a downtrend until it's not. So if we get that rejection from 390, we'll still be looking for that next leg lower. But this will be a lot trickier if we do bounce without breaking down to a new lower low, because we will have a higher low, higher high within the medium term downtrend. So we'll have a short term uptrend and a medium term downtrend. So we'll have to be very careful around that risk level where the bear is living at SPY 390. So 390 is your critical risk level, and you need to be prepared for the bear scenario while we're below 390, because it could still be possible we are entering into a secular bear market, and that will be the confirmation of the confirmed breakdown below the 200 simple weekly moving average, which is now currently still sitting at SPY 358. On the NASDAQ 100 triple Qs, it is the exact same story that I just went over on SPY. So instead of repeating everything I just said, I'm going to give you the critical levels. You need to wait for a bull breakout above 284, and then the critical risk level retest will be up there at 293, and the bearish breakdown will be below 267 for the next price target at 258. You can see we're very clearly still in the downtrending channel, so do not expect an uptrend until we break out of the downtrend, and we do have a huge gap to fill to the upside at 279. So again, it's a trading range between 267 and 284, with the breakout being the confirmation in the price action to let us know where we're going from here. We're in a strong downtrend, so expect lower highs and lower lows until we break the downtrend. On the Dow Jones, we had an island reversal, gap down, so we do have the situation that does favor the downtrend, because an island reversal is typically telling us we're going to see a trend reversal. So that strong bounce is now a clear bearish rejection, and we still have the elephant in the room of the weekly gap at 285, and we know weekly gaps typically get filled, and it looks very likely that we're going down there to fill that gap. So in the event we break the previous low at 287, look for the gap fill at 285, and below that we have price targets at 281.8 and 276. The bull breakout is going to require a break all the way back above 303, the resistance trend line at 306, and the critical risk level at 312. On the Russell 2000 IWM ETF, we were down 2.94%, and we came back down to support at 168. We have a gap to fill to the upside at 173, and the bull breakout will be above 176 and the critical risk level at 178. The downtrend favors lower lows, so on a break below 168, we'll be looking for a retest of 163.75 or that next leg lower at 159. On the ARKK ETF, we were down 6.57%, closing back down below the support trend line, which was right there at 37.7. So it does look like we're coming down to retest the June lows at 36.5. And if that level breaks, look for a brand new lower low at 33.7. Upside critical resistance will be $40, $41, and then $43. On Friday, the VIX was up 2.69%, and we continue to see higher lows and higher highs on the VIX, and we can clearly see the VIX is still closing above 30, which is a very volatile market. The bulls will need to crush the VIX before it can get into the mid 30s, otherwise we will get that next leg lower in the bear market. But if the bulls can crush the VIX all the way back down below about 28, then we could start to see a continuation of a bounce, and we could still get that higher high after a higher low. On Bitcoin, we're currently trading around 19,500, and Bitcoin continues to be very strong around this support at 19,000. And if there's anything that Bitcoin is telling us, it's that there's still some type of appetite for risk on sentiment. The last thing Bitcoin did was break above our resistance trend line, come back down to the resistance trend line, and find support above the 20 simple moving average. However, there's still a clear rejection from 20,000, so we are still stuck in a trading range between 19,000 and 20,000. So for that reason, I would get more bullish above 20,000 and more bearish below 19,000. Above 20,000, we should retest resistance at 22,000. And below 19,000, we should be making that next leg lower at 17,000. On Amazon, we were down 4.77%, and we're right back down to that support zone between 113 and 115. And if this level breaks, we will be looking for the next leg lower at 106. To the upside, we have gaps to fill at 119 and just below 126. So you can get a lot more bullish if we start to break over 121. On Microsoft stock, we were down 5.09%, and Microsoft looks like a very clear island reversal from the highs where we were going up there around that resistance zone in the 250s, and now we're right back down towards the support at 233, very close to finishing that next leg lower at 231. And if we break 231, it's extremely risk off because we could be going into the 220s. We have upside resistance at 242 and a gap to fill at 246. And we still have the most critical resistance right around the 250 zone, because above that, it will be looking a lot more bullish for the gap fills above. On Nvidia, we were down 8.03% on Friday, and we could see a very clear rejection from the resistance trend line. So it doesn't appear that we are going to fill that gap at 142 at this time. because we need to respect the strong rejection from resistance. We're back down below 122, so it does look like we're going to complete the next leg lower. So watch that previous low, which was an intraday low right around 119.5, because if that level does break down, you will be preparing for another leg lower. The upside gap to fill is right around 131 and critical resistance is just below 135. On Tesla stock, we were down 6.32% on Friday, and Tesla did hit our double top price target at 231, but it did not stop there and it did continue lower. We're going to have a brand new gap to fill right around 235.35, and we do have another downside price target just below 219. If we break below 219, it's extremely bearish and extremely risk off, as we're very likely going to see capitulation in Tesla. Now, I do expect to see some type of dead cat bounce here because we are below the lower Bollinger Band and we're extremely oversold. So if we hit 219 and bounce, my price targets will be 231 and 235. With the possibility of retracing all the way back up to about 240 to 250. On Apple stock, we were down 3.67% on Friday, and Apple has that very clear rejection from the resistance at 147. And again, we have another big gap down and closing near the low of the day. Resistance to the upside will be 142, the gap close at 145, and the most critical resistance will be the break above 147. To the downside, if we continue lower, look for support right around 138, 136, and the gap fill at 133. And as you can tell, we are still in a downtrending channel. The financial sector was down 2.37%, and the financial sector did turn that bullish island reversal into what now looks like a bearish island reversal, which means we could be coming back down to support at $30 and possibly making a brand new lower low. The industrial sector was down 1.91%, also turning the bullish island reversal into a bearish island reversal, which could mean we're finally going down there to fill the gap right around 81. The healthcare sector was down 2.12%, and as we could see, a very clear rejection from the 50 EMA, and on a breakdown below the support at 121, look for a retest of the June low at 120. The energy sector was down 0.78% on Friday with a very clear rejection from that resistance just below 83, which does mean we could come all the way back down to about 76 if this rejection continues lower. So jumping back over to the S&P 500, understand the market structure looking forward because there should be great trades in both directions. Just remember the trend is currently down and this is a downtrend until it's not. Expect lower highs and lower lows until we clearly break the downtrend. And do remember, it is possible you could be entering a secular bear market if SPY starts closing below 358. If you understand the magnitude of that statement, you should be very well prepared for a secular bear market starting now, so make sure you know exactly what you're going to do if SPY starts closing below that level. Secular bear markets can be very painful or an opportunity for you to buy at very low prices as long as you're preparing now and you make sure you have dry powder to buy at much lower prices. Remember, I always tell you, don't panic, have a plan, and panicking is not part of a trading plan. Don't trade on hope or assumptions, follow price action, and follow the trend and let the price action do all of the talking. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. If you want to learn more about Bank or want to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.